Hey guys, I'm just setting up a few other things and we'll get started in just a few minutes here. Waiting for a few more people to join. I've got some guys over in the Parsec screen share and chat. For those of you who are hearing this on YouTube, there is another stream running for some folks that cannot log into YouTube from where they are currently. So I have a different stream running for them. And for those of you guys over in Parsec, if you can, go ahead, you can turn on your cameras. I'm not going to be doing a camera with you guys today, having some technical issues with that. Jimmy can get you set up over there. And we're going to get rolling here very shortly with some TA. Bitcoin, altcoins, traditional markets, and we're going to talk about SFPs today. So I know I'm competing a little bit with the music here, my apologies. But when we do get rolling here, let me get the volume under control there. Kind of just get it a little bit in the background. Sorry, my mixer went down, so I'm using software controls today. I've had a lot of issues since the Microsoft updates, so investigating some other solutions, but we'll cross that bridge when we get to it. But for those of you guys today, there's going to be no video feed of my camera, but you should be seeing my charts. Just confirm that over in chat. For those of you on YouTube, hello, welcome. I see Roka, Baba, Don. How you guys doing? I will be starting very, very shortly here. Just going to jump off the mic here, set up a few more things, and we'll get started. All right, let's get the music down and let's get this rolling here. Make sure it's paused and doesn't play through the entire playlist while we are not listening to it. All right, we got the right screens up here. You guys should be seeing the start screen change a little bit there as I'm moving stuff around. Let's see if I can manage this start without a bunch of voice cracks. Hello and welcome to Market Madness Wednesdays here on Landy's Crypto Corner. I am your host, Landy. We're going to take a look at Bitcoin today, today being August 2nd, 2023. And we'll also take a look at altcoins, traditional markets, and then we're going to follow up from Friday's live stream with swing fail patterns, and we're going to add a little bit of refinement to that by taking a look at volume profiles and volume in general when evaluating swing fail patterns. And I'll give you a few little tips and tricks regarding that. And we're going to take a look at Bitcoin on the daily to start with, and we are going to follow up with that 2-day time frame as well. So on the daily here, many of you already know, we hit that downside target that I've been looking for quite a long time now at that 28.426 area. In this case, the wick low came in at 28.477, and I think that was like, yeah, it was $3 above the daily support line that I have here, which is coming in at 28.474. So, generalized target is still going to be that area to the downside at that 28.426 area and the 28K area if the lower second standard deviation of the Bollinger Bands is lost again. Now, this is going to be very important to watch for. As you can see, the Bollinger Bands are compressing again. So that is likely going to lead to a wider move here. And a little tip for you, I know that things are very bearish right now in terms of sentiment, and there's news that's bearish, and, we just swung the low over here and had a nice pump off of it, and this is falling apart. But generally, when we are seeing Bitcoin test the downside into the lower second and third area, and then it retests on that expansion down and gets bought back up, what we want to look for is where that lower second standard deviation of the Bollinger Bands is. And currently that's coming in at 28,840 to 850. And I do suspect that it's going to compress some more here after close today. So probably around that, $28,900 to $29,000 area, which is right around the lows here. If that area does hold up, it usually does mean that we're going to run back to wherever the top side of the bands are above the basis. So keep that in mind. But if it is lost, that would be continuation back down to this daily support level at around that 28.426. I would target down to 28K initially. And if we did see expansion, to be quite honest, I would be looking for further downside targets, somewhere in the 27 to 27.5 area. I know I don't have 27K marked, but that is, it's a whole number, psychologically speaking. I'm pretty sure that if we did head down in that area, you're probably going to get longs off the 28K, 27.5 to 27.250 area, and then probably find a lot of stops around that 27K area. That's just kind of how things go when Bitcoin is in these downtrends. We could also see a very similar look to what we had back here from the highs in April down to June, where things just kind of float and bounce around, but are in a general downtrend to the major support areas. And again, we'll get into some of the longer term stuff here, but I do want to keep it topical to this daily and 2-day, especially because we do have the 2-day that is going to be closing with today's candle again. And we'll follow up with where that momentum pivot was and where the bands are currently in relation to the coming closing structure and band position. Now, in this case, there is, you can generally call, I'm looking on the daily here. So this low side structure is coming in around 26.8, and we've got a bunch of wicks down here. So you can call that area below the daily support here. And I'm not going to mark it just yet. I want to go through and refine it on this particular chart a little bit later, but you can call it like 26.8 to 27K as the big area below this daily support area that I have marked at around 27,250 to 27.5. To the upside, on the daily chart here, we're looking for Bitcoin to get above the basis and stay above this overhead resistance. Not just swing it in a lower high fashion, but regain that 29.4 to 5 area. And then specifically, you could see where Bitcoin kind of stalled, and it was right around the low side structure. And that's the structure that we were looking at, that 29.8 to 30K structure. On the wick high, we saw it swing $30,000 and then reject down. And I have been documenting this stuff and my thoughts on Twitter, or X, I should say. And I did call this out. I had mentioned yesterday on the move up, be aware of a 29.8 to 30K deviation. We did see that. We can jump over to this chart, and I believe I had this chart marked up with that info for the 15-minute time frame. Oh boy, I've got a lot. Yeah, August 1st was what I was looking at. And yes, so this would be the chart. And I had mentioned, above this this high that it put in at around 29,814, beware of a deviation up to around that 29.8 to 30K. It swung that area, deviated, came right back down. And I had said on the other side, if the low structure here, which is coming in at 29,160, did not hold up, then it's it's right back into the value area, and I'd showed a value area chart and swing the lows around that 29K region, and that's exactly what happened. So we haven't quite gotten into those lows over here, but it is something to pay attention to, and we will come back to this chart, but I do want to get it on the screen a little bit more here. What I'm going to talk about later to kind of give you a preview is how volume and swing fail patterns can be read. So adding that additional layer of confluence to your swing fail criteria, or additional criteria to be looking at when evaluating for a swing fail pattern. And we are starting to see setups emerge on the other side. We won't use this exact chart, but I'll go through and mark up price action along with volume to show you what I'm looking for when it comes to swing fail patterns, in addition to what we discussed last week. And we'll kind of go from there. I mean, the Bitcoin areas are all the same areas that I've talked about to the upside and downside. If Bitcoin can get back above 30,000, I need to see that closed above, that upper first standard deviation, which is coming in around 30,100 right now. It's likely going to update to around $30,000. So instead of just talking about the downside here, if it can recover above 29.4 to 5, look for 29.8 to $30,000 again, where this wick high came in. And quite honestly, any price action that closes above this wick high are likely going to see tests back up to the weekly overhead resistance at 30,300. And then there's that ever important wick there, where I suspect the upper second standard deviation is going to start bracketing around this weekly and this 30,400 wick high of this move down. There is a slight bit of a wick high that is higher than that, but the real rejection was around that 30,300 to 400 area. And I do suspect if it was regained, we see more of an upside move. And the upper second standard deviation is coming at 30,500. I would be looking for this to be either at or below the weekly support at close today. We'll see. We're getting some pretty quick compression here after that move back to the basis band at around that, it was at around 29,800 yesterday. Before yesterday coming into close, it is now sitting at 29,670 to 29,700 700 or so as price kind of moves around it. Not too much has really changed, for price action in the past week. We had some nice volatility kick in, and then it's right back to where we were. It does not look good. It's not a good look for the bulls. This looks like a bull trap, to be quite honest, in this candle right now. We'll see. Let's go look at momentum. We do see DMI is red, so this would favor a more bearish move if we do see the lows broken, and of course Stoke headed back down. And I'd mentioned this in the last stream that we could see something like what we saw over here, which is kind of a bearish reset of momentum if Bitcoin does not regain that low side structure at that 29.4 to 5, and then specifically the close opens there at around that 29.8 to $30,000. And it's looking more and more like that may be the result, but we still have to give it time. 28.926 is going to be the pivot, so there is still room for the bulls to pull this together if they can hold the lows at around $29,000. The 2-day the 2-day closing in about 5 hours with the daily here. Let's go ahead and look at the actual chart in relation to support resistance. Just a doji. Now, wherever this closes, below the wick low, continuation down, above the wick high, continuation back up, or mean reversion back up into this range here, likely around that weekly to upper first, which is at 30,800. So all the same areas have been calling out in the Bitcoin in 60 seconds videos and in each and every live stream that we've talked in the past, well, I don't know, it's been a month or something like that. And it's been more than a month. So right now the upper first standard deviation is currently in the overhead resistance zone. The lower first standard deviation is in the overhead resistance zone at around 29,500. So that does obviously need to be reclaimed. I do suspect it will be either at or below there, depending on where today's closure comes in. And I would be looking for the lower second standard deviation to continue to tick down towards that daily support level at 28.4 to 6. Right now it is at 28.8. It could end up even in the middle of this support down here between the weekly and the daily support area at around 28 to 28.6. So that's a generalized area that I'd be looking for the lower second to hang out in on this next closure. And if, of course, we do see price closing on the 2-day below there, then, that's going to heavily favor those downside targets, and we'll take them one at a time. On the low side, I would be looking for that 26K area, maybe under into the mid to upper $25,000 area. And that is just based on the look of the Bollinger Bands and my, experience evaluating this. To the upside, if the weekly can be regained, of course, that upper first is at that 30,800 right now. I do suspect that's going to head down to around where the upper first is on the daily. They kind of switch positions as they chase each other. Really does depend on the expansion look. Closing below the lower first, I do suspect we'll see a little bit of slight expansion, but we'll probably see the top side of the bands kind of flatten out, maybe get a little expansion, and then start to head down if Bitcoin is going to remain below that basis band, which is coming in at 30,150. Nearly got tagged in today's price action. The upper second standard deviation is still at 31.5, and the upper third on the 2-day is up there at 32K. So I do think, let's say Bitcoin screws around, pumps, regains, this is all theoretical, regains the lower first, and then, gets above that weekly. I do think that it's going to find some heavy resistance again around the highs. Obviously, pulling back from the highs is nothing new, but because of the Bollinger Band volatility setup, even if it does get expansion, I think that area at that 31.8 to 32.4 overhead would still kind of cap things for a little bit, even if you saw wicks outside of it initially. And then to the downside, this area between the 28 to 28.6 and then the 27.250 to 27.5, I do think would kind of cap things for a little bit initially on any kind of further downside moves. So we kind of have our ranges there You can call it 27 to 27,250 if you'd like, but basically 27,250 to the downside is kind of max pain that I'm looking for from the 2-day chart until we see further closes. Of course, we'll follow up on Friday to see where things are, and then kind of to the upside. We're looking at that at best case scenario being that 31.8 to 32.4 is really kind of where I would be looking if things did kind of fully recover and rip to the upside, which, from its current position, not looking great. Definitely favoring the downside at the moment. BBWP is in the area where it's about to get to like some confirmation levels for both the BBWP and moving average here, which is roughly around 15 and 10%. So 15% for BBWP and 10% for the moving average. So any kind of moves back to the top side after this on the 2-day, more likely to reject initially. Then you got to see where things find support. And we've already seen one of those rejections. So, take that how you will. When looking at the 3-day chart, we just had an open, and this is, kind of hanging around the basis band here, which is at 29,134. And then look at where that lower first standard deviation is coming in on the 3-day chart. It's right at that daily support level, just below the weekly here at 28K at 27,500. So again, to the downside, we're seeing all the same areas really starting to line up with volatility, same as to the upside, overhead resistances in most cases. And just below there, we see the weekly support and lower second standard deviation on the 3-day lining up around that 25.8 to 26K area. The upper first coming into that 30,800 zone, and the upper second just above that daily area at 32,500 to 600. So getting the same kind of look across the board here with bands and support and resistance. I like that. And we can see the 5-day, which is going to be closing on it's going to be Wednesday. It's going to be Friday. So that means that we're going to be closing the 2-day today. Got Thursday, Friday. So Saturday will be the close on the 2-day. The next close on the 2-day. So we'll get a preview of what to look for on the Friday live stream. Sorry, just doing the days in my head. And then this we can look at when it before it closes, because I'll be streaming before the actual close of the candle on Friday. But we'll look at where things update to. Directly hit that basis band on the 5-day here at that daily support. We can see that just below that basis band and the supports here, specifically that daily support underneath that 28K weekly support, the lower first is coming in at 26,875. So again, 26.8 to 27K kind of coming up again and again and again as an area to be aware of should Bitcoin especially break down from that weekly 28K. So if we did see price action back to the lows that breaks 28K, especially on some higher term time frame closes, daily, 2-day, 3-day, then that would definitely be opening up those targets down to 26.8 to 27K, and those daily supports at 27,250 to 27.5. To the upside, upper first coming in just below that weekly support resistance area at 30,300, splitting the difference there between 30K and 30,300 at 30,150. Above there, I'd be looking for this to run the highs to the upper second, which is coming into that 31.8 overhead resistance, that major area. And then, of course, the weeklies all in roughly the same areas. Now, the upper second is below there at around the highs at 31.5. Upper first was a rejection, and it was just tested. So $30,000 or so was tested. Basis band also at that 28,500 area. If that area does break, then we're looking to that lower first. And generally speaking, that is coming into the support area below that weekly at 28K. So again, I know I sound like a broken record, but it's coming in at around 27,100. So again, 26.8 to 27K, and then we've got the daily supports just above there. All right, let's poke around the markets a little bit here, and then we'll take a look at this in just a moment. Let's poke around the markets. I am curious to see what ETH is doing, personally speaking. So we'll go out to the daily here, and oh yeah, that's what Rocco was asking me about, was the trend lines, the long-term trend lines from the beginning of ETH's time. At least I could have probably used a better chart for that. This is Coinbase, but for those of you that are wondering about things like the news, news is not something that I really pay attention to. News always comes after we've already seen the setup develop on the charts for us. So not something that I'm really concerned about, to be quite honest. But let's see. ETH is at, let's look here. ETH is at the lower second. We do see tight compression. Interestingly, we see that the 200s are on top of each other here. So this is telling me that this is a likely target area around 1780 to 1790. And if it does get below there on the daily, you know, it's likely going to, you know, head for this low over here again, in the 16, at the low 1700 area to 1600 area. And realistically, anything below this wick high at 1905 is downside angled. If it can hold this lower second and reverse, it's got to regain that basis at 1882 to the upper first, which is at 1909, which of course would be taking that little wick high here above the basis at 1905 out, and still not out of the woods below the 1930 area. So closes below 1828 would start expansion to the downside more aggressively into that 200 area, where the 200 EMA and SMA are coming in at around 1780 to 1783. So what does this look like when looking at the daily here? Now we do have a bit of a setup, but it may fail. 1840 is the number to beat. Currently on the daily, Stoke is pivoted there, and we can see that ETH is trading about $5 under. What's the 2-day looking like on ETH here? Yeah, this is starting to get expansion to the downside, tapped on the 200 EMA and the lower second standard deviation, which are lining up at 1811 to 1815. So already saw that move. You know, once it closes below these wick lows, it's going to be below most likely that 200 as well. If it loses that area on a close, then it's likely headed towards the zones that I just spoke about. Interestingly, the 200 SMA is starting to get into the bottom side of this wick low at 1620. It's about $30 under right now. So on the 2-day, you know, bulls better hope that moves up and aligns with the wick low of this, of really this entire move up. Got a little bit of a meme pattern, double shoulder head and shoulders. I'm not really interested in that. Might be a little high on that one. No, you're going to see flat bottom, broken targets to the downside, targeting the wick low in most cases. I don't really care about patterns, more about expansion and contraction. And in this case, the daily, 2-day are showing the same thing. So 1887 on the 2-day. To turn that back up, that's not happening today. And then below 1840 on the daily, and this is headed down. So not the best outlook for ETH or Bitcoin right now on the daily 2-day time frames at the moment. Just looks like continuation, but again, we're going to talk about this with swing fail patterns. You know, as long as those wick lows even hold up, then we're just kind of playing around at this next support to the downside for Bitcoin, and in this case, you know, ETH might head down a little bit here. 1858 on the weekly as well. So trading at 1835, not a good look for ETH. Lower first is coming in at 1780 as well. So that gives confluence for that area down there that I just spoke about, where the 200s were coming in. I'm sorry, was that the 200s? 1780. Yes, that was the 200s on the daily. So from the weekly perspective, that's your lower first standard deviation. And, you know, it is the low side structure area down here, 1780 to 1800. So that's the next area that I'd be looking for. And then below there, loses that area. The lower seconds coming in at 1700. And the 200s on the weekly are kind of lining up with that wick low below 1700, you know, your 1600 to 1650 area. So be aware of that downside. And then anything back above the upper first here, well, that's quite a ways away currently, but you know, we're looking at a little bit over $100 move to the upside to get to the upper first on the weekly, as it is sitting at 1943. So one step at a time. If it can regain 1905 to 1910, 15, then that'd be a good indication that things likely head back up and put in a low on the weekly. Below there, bad downside for ETH. Okay, let's move on to look at something like Litecoin. I think the halving is on deck here, and it looks like it's just playing around in this compression. Bulls don't want to see anything more than a deviation of the 200 EMA SMA that's coming in here. We can see that I had pointed out this order block a while back, and that is currently holding price up, but if it fails, it's back to, you know, 80 to 83 bucks and possibly under on expansion. So keep that in mind. This does look like compression to downside expansion. This is already below, or trading currently below, the 200 EMA, 200 SMA, and the lower second standard deviation at 88.30. We see closures here. I would expect, you know, the next, you know, 80 to 83 to get hit, we'll call it. And then I would expect, honestly, you know, looking at upper 70s to 75 bucks and under. If this low over here is dropped at 71, well, it's going to be a pretty quick move back down to the next area at 65. There is some supports at around 70 as well on the daily. Yeah, so it's really, next move's going to most likely be low 80 bucks if it closes here, or lower by end of today. It's currently trading at 87.50. Litecoin has been known to run the bands in both directions, so, you know, I wouldn't like. It would be downside expansion below the lower second. So, and a Stoke pivot down below 90 bucks. That would confirm today as well. 2-day lower seconds coming right into that support zone. So right in between that 81.77 and 83 bucks. So still, again, coming up with that target at around 80 to 83 as the next move for Litecoin to the downside. If it can regain, you know, 90 and 94 on the daily, it's got to take out this close open structure up here at 93, 94. Yeah. So if it can regain that, you know, I would expect it to run the other way, but not looking encouraging currently. Just evaluate it after close today. And that's kind of all I'm going to look at here. I mean, there's some other alts that we could take a look at and derive some potential targets from, but I'll save that for later in the stream for requests. I do want to look at USDT, as that is going to be playing with Bitcoin. Got a little bit of an inverted head and shoulders here, and it's been rejecting, but above 7.42, 7.52%. This is likely to get expansion to 7.81 to 8%, somewhere around this area up here, and then possibly those highs in the 8.4 to 8.5%. Now, that is going to Stoke pivot up is going to be 7.38%. It's at 7.4%, so we're likely to see that Stoke pivot up, which would equate to a Stoke pivot down on most on the daily, most cryptos on the daily, like Bitcoin, Ethereum, so on and so forth. And if it does start closing above 7.43%, we're going to see expansion to the upside. Again, it's right up against resistance. Upper second, lower second, they're either going to act as reversal zones or continuation zones. So obviously closures above it and reclaiming the support, we'll see continuation in the subsequent candles, most likely, even if it's just on a wick. And we'll see BBWP get its expansion as well. And then we kind of go from there. It's not a given that it's going to run all the way up to the 8.5% or 8. This was, on the highs 8.5%. It's likely, though, at minimum, if it does start closing at that upper second, that it's going to run to around that 8% region, which likely means that we see Bitcoin and altcoins, falling. Either back to those bottom side supports in Bitcoin's case and lower, or just kind of holding sideways depending on what coin you're looking at and what time frame you're evaluating. Now, if we look at the weekly, we can see that the weekly is coming in coming off of a nice bounce, coming into that upper first kind of zone. It's gotten above the basis here at 7.3, and the upper first is coming in at 7.6, and we see the upper second is that 8% area. So again, I would initially be looking for that 8% area, and then we come back to it later and kind of go from there. So that's going to do it for the crypto side of things and a couple altcoins. I will take some requests later, and we're going to quickly look at traditional markets though first. So, midweek checkup looks like the weekly is throwing two wicks at this overhead resistance here, this guy back here. For Dow at the upper second standard deviation, pullbacks to the upper first, coming into the Friday closure to around 34,690 are fine. I would give it a little bit of room even under there to the highs over here at around 34,430. And I do suspect that the basis band, once we see the open next week, is going to be somewhere around these high side structures. And above, currently it's coming in at 33,928 on Dow, and the lower first is coming in at 33,166. That'd be a nasty pullback, but above this last low at 33,100 on a close, and I do think things are okay, even down to 32,586. That's a massive retrace, by the way, from the daily time frames. But from the weekly, it would still look fine and still preserve its chance to run this high again. Now, we'll see what the end of the week looks like if we get a Wednesday into Thursday reversal on those lower term time frames back to the upside. I mean, this almost looks like a Wednesday reversal to the downside. We'll see how this develops coming into that Friday, and then we'll go from there. But targets on the basis here coming in at 34,887, And again, that's generally where our, I can actually get the time frame pivots. What am I doing? We can look at the weekly on the daily, because JRTA has kindly provided this indicator for me right now, and I will hopefully have this integrated for you guys very soon. All right, so yeah, the basis is coming in above that upper first. So 34,691 on the weekly, and the basis on the daily is coming in at 34,887. This, of course, is going to tick up at close today. And it's still, the basis is above the highs right now. So I have no issues with this pulling back. And in fact, it should. I mean, this is quite the run up into that overhead resistance. And, it can even play down to the lower second on the daily. Got the 200s right there as well. Looks fine to me so far. And we should see the 200 EMA, 200 SMA. They're getting close, but I think the EMA is going to catch up a little bit here. Lower seconds coming in at 33,687, and those 200s are coming in at 33,460 to 33,560. So we've got a nice little stack down below, just below this low, and I do suspect that these are going to be moving up in the next couple of closures, probably by Friday, to get on this low side W for winner chicken dinner structure here. And we can check momentum, yeah. 35,600. 35,281 right now. It's in a pullback. Nasdaq's 15,682, and we're looking at the daily as compared to the weekly. It's still coming into its lower first area, and that is its upper first on the weekly at 15,233. That is, we do have a bit of a structure change here. If we do see a close here or lower, this would be your lower high, lower low setup, as bounces likely to lead to either consolidation if it takes out this last high at 15,800, or if it's a lower high, we're seeing that downtrending structure develop. I suspect this may end up being a bit of a consolidation that we got coming up here, as this can come all the way down to the lower second on the daily. Yes, that would be below the lower first on the weekly. Depends on what the closes look like. If it closes above here on the weekly coming into next week and then deviates under to the lower second, lower first area and reverses and gets back above the upper first on the weekly, then I would be looking for more upside on NASDAQ. As it stands right now, 15,200 to 15,223 at the lower first and upper first on the weekly, lower first on the daily, upper first on the weekly is what I would be looking for next, down to around that lower second area on the low side here at roughly 1,500 to 14,960. It's 979, not 969. But either way, that's kind of what I'm looking for on NASDAQ coming up here. Pressure down on any closes below 15,682. And it's a fairly fresh cross down as well. SPY, we've got, let's do SPY here. SPY is passing its basis band to the downside. Its upper first is also where, its upper first on the weekly is where the lower first is on the daily. So basis band at 450. I would expect it to come test these highs around the lower first and the upper first. So 440 to 445 is the next big target. And then as long as it's above the lower second on closes here at 438, at least from here right now, this will update at close, at the close open. But, above 440, it's fine. No issues. I would rather see it for further, if it wants to test further up, I'd rather see it, in the more immediate short term, stay above 445. Other than that, it's probably going to come in and consolidate. That's what it's looking like to me. from the daily weekly setup. Yeah, 458, 460 area on the daily. Tons of drives of bearish divergence. So I'd be looking for this to consolidate for a little bit. Likely means that Bitcoin's going to head down, and or pause and go sideways for an extended period of time until traditional markets kind of work their way through this period, and we get some more clarity on direction, which I do think will take a little bit unless things just nuke. Dixie has hit the next target. It hit our basis band on the weekly at 102, our daily targets at 102, and then our basis band at 102.40. It is pushing on the daily to our next target area that I've been talking about at 103. So it's 102.50. We've met that. We met it just shy of it in yesterday's candle. So you'll recall that Monday, when I was talking to you, the big area that I was looking for is above 102. Look for 102.50, and then take that to the next area at the upper second standard deviation, which is now below the 200 EMA at 103. That would be the next area to watch out for. And then just above there, let me get rid of this thing here, put it down in the corner. Just above there, we have the overhead resistance, one of the main resistances here at 103.50 to 103.60, around the overhead resistance and the 200 simple moving average. So 200 EMA is where the upper second is at 103 to 103.20. And then above there, we have the overhead resistance at 103.57 and the 200 simple moving average at 103.65. So, and the upper third at 104. And I doubt that it's going to just push right on through those areas. When looking at this, it's got some juice to continue working its way up there. 190 cents is the pivot, and it's well above there. I do think initial pullbacks, once it hits around that upper second to that overhead resistance there at 103 and a half or so, and we can see that the upper first standard deviation is coming in there as well. If it does recover above 104, 105, that's where the long-term downside might be nullified, to be quite honest. So we'll just have to watch it. For right now, still heavy downtrend. It has not done much below that 103.57. If it starts to break that, it still needs to put in higher lows and get a structure change on the weekly from there. So, not too much. Not too much different than what we've been discussing. As long as it's above 102 as well, and above this little higher low on the daily here, technically you have a higher low, and if it did take out that high, I would want to see it higher low again, all right? So as long as it's actually above this last low and the low wicks coming in at 155, then it's probably going to be upside. So that would be my take on that. And I would just watch wherever it puts in a high, and then take a look at RSI, because there may be bearish divergence that can build off of that. And realistically, you want to see in-trend bearish divergence, and this isn't even close to putting any in-trend bearish divergence in, right? Even if it puts in a high here, it's more likely to keep testing up. So we'll see where it gets to. I mean, 12-hour, it's getting expansion again. Or it's going to get expansion above its 200. I have the feeling that this likely becomes a deviation above the 200s here, but not totally confident in that assessment, just so you know. We do have a positive stack where the EMA is above the SMA here, indicating that it is more likely that it could test up to that 103 to 103.50 area. But it's about where does it put in a high and then come back. If it can hold that area to the downside, then it's likely keep marching. That's going to be Dixie. So we got traditional markets, we got Dixie. Do you want to look at bonds? We'll wait till Friday. We'll wait till Friday for bonds. Um, let's go back on over to Bitcoin here. And I will, before I get started, that's going to kind of do it for the main portion of technical analysis here. 12 hours got bearish divergence on Bitcoin. So, and it has yet to even confirm. That is going to be something that likely takes things back to the lows and lower if it does confirm. So we're going to get into some swing fail pattern stuff. So what I'm going to do is I'm going to take a pause for a moment here. Now that we've kind of gone through the bulk of the analysis, I want to look over to chat over here on YouTube. Hi, Cheryl. Hi, No Name. And I want to ask you guys if you have any questions quickly before we get into swing fail pattern stuff. And for you guys over in the Parsec stream, if you have any questions regarding the analysis that I just went through. I'm going to give you guys just a moment to catch up over there on YouTube. You guys on Parsec I think are hearing me pretty much right away. There's no delay. I am going to mute my microphone for just a moment and turn on the music while you catch up for just a second. So it's just sitting in silence, and we will. What do we want to do? We want to do Liftoff. I should do the song called Liftoff while everything's headed down. Yes, this is the way. We're going to do the Liftoff song. Hold on here. I have no idea. I've never heard it before. I've definitely heard this actually. I just don't remember it. All right, so we're going to have a little Liftoff here. And we will get into swing fail patterns here shortly. I just need to take a drink. This is all an excuse for me to take a drink and rest my voice for a second. And let you guys catch up. Give me just a moment and I'll be right back. Okay, now that the bulk of the analysis is done, I will get ready here to do a little bit more of a follow-up or a continuation of our swing fail pattern conversation from Friday. And we're going to add volume to that. So let's go ahead and get rid of the music here. And let's talk about swing fail patterns as it relates to volume, as I do think it's incredibly powerful. I was kind of hinting at this type of analysis in my Twitter/X thread yesterday. I hope that you gave that a look. My warning about the swing at 30,300 was because of the potential for a deviation when evaluating volume. So, and then looking for a swing fail pattern. So in this case, we've got the 15-minute chart on Bitcoin here. And when looking at the downside here, I'm going to point out a few things here. So I'm just going to kind of point out the larger volume bars here. And we've got a couple in the low side structure here. I'm not going to take this one. It's not as significant in my opinion. This is a little bit more significant over here. And then on the way up into this consolidation, we had another bit of high volume. And then on the downside, we had this bit of high volume here. This is the highest volume actually that we've seen on this candle that just wicked down to around 28,900. Now, when looking at this, this first wick down here on high volume or higher volume as it relates to the previous volume in this move to the downside, we can then define a bit of a swing fail area, and that swing fail area is coming in between that 28,738, and you'll note that there was a candle that wicked below this high volume area, but it did not close. So that was this guy here, and that was also a notable higher volume candle. And then we had another notable high volume candle that swung this low side wick of the highest volume candle, and we saw it get bought back up and close above it. So that would constitute a swing fail area and a swing fail pattern once we see the top side of this structure, so the high side here, break. And you'll note after it puts in another swing of this low over here at that 28,738 wick low, it comes right back up, and where does it reject? It rejects or sits right at the highs here. It closes right on them. I'll zoom in just a second here after I get the horizontal ray here. You'll also note that you can already see it on the chart, what I'm going to call out next. But I'm going to take this step by step first. You'll see that we swung right to this high side structure and closed on it. You can see that there was a wick here just above. You can also take this as a bit of an area between this close and this wick high of this now what is a confirmed consolidation, right? So when you look here at this specific structure, we can identify that we have a confirmed swing fail. We've got 1, 2 swings of this low, and then we come back up and we test the top side here, and we are waiting for, you know, this close and this wick high of this smaller consolidation to be resolved, and then this entire bottom area is a swing fail pattern to the downside. So swung to the downside and failed, and then now we mean revert. In this case, because it's a downtrend, it's mean reversion back up. And you can see that you can always then, you can mark off, the next big areas. It got past this low, go and test this high. It didn't get to this high until a couple candles later, and then it's this high, so on and so forth. But we're going to focus just on the structure here, as you should already be marking support and resistance zones. Now, the next big area of volume, which we saw good volume on that consolidation, we saw compression of volume, and then we saw larger volume candles. This is, likely taking out shorts to the upside, and we see a move up. And on the highest volume candle, I'm going to mark it here. This is the one I called out yesterday. And that was this guy here on the 15-minute, I believe. Yes. So 29,726 or somewhere around there. It might have been 29,814, somewhere around these two candles. It might have been the 29,814 because you can see that the highest volume candle was the 29,726, and the wick high came in at 29,814, but closed back inside of this wick on the very next candle. And let's let's really zoom in and evaluate this. So you've got a potential area here of interest that if this breaks out and closes above, if we get a close above that highest volume candle, it's likely that we're going to see a move up, but you have to be aware of where the wick high is, because you don't want to see swings there that just swing the wick high and continue to swing the wick high and then close back inside of this higher volume candle here that had the wick high at 29,726. So the criteria would be, okay, if we come up and we get above it, you're likely to see price action head up more. But I was saying be aware of a swing fail that then reclaims this high volume candle. And quite literally on a close, I had mentioned in my thread there, 29,814 above there, we're likely to see moves up to around, that 29.8 to 30K area again on the kind of high side. And we did see this wick high come in at 30,333. And then I had mentioned beware of any deviations that reclaim that 29,814 to this basically this area at 29, that high volume candle at 29.7 or so. But realistically, a bearish reclaim of 29,814, which was what had led to that additional move up, creates a deviation, bearishly reclaim that wick, and then you'll see that reclaims that high volume candle close, or the bears do, and reject from it, and then we begin the downtrend. And then I had mentioned the next big area to look out for would be this low at 29,160, because that was the consolidation before the break up. Bitcoin came down and it hit it, bounced off of it initially, and then headed right for the top side of the consolidation here. Now we have a high volume candle again. So this nice high volume candle that we have can be evaluated for possible swing fails. And it's basically going to work like this. We're going to get rid of all the lines that I just drew, because those horizontal rays are just to point out the areas of interest. But we're going to focus in on just this candle, because there is a setup here. And we have already started to see some of that setup developing, because this is the highest volume candle of this entire move down. It's going to be a very important one. Wick low is coming in at 28,903. And we can give it a little bit of a zone on a close as well. But what I would be looking for is for this move down to continue. It's going to continue below 29, this 28,903, and that would be on a close. Then I'd be looking for a move down to most likely the bottom side of this structure, again around the 28,426 area, and possibly under down to 28K. And the reason why is because it is a high volume candle. Closes below are going to indicate continuation, right? We are starting to see a bit of higher volume within this little range that it's building on the prior 15-minute candle here. And I would expect, in the next few candles, if it can't break out above that wick high on a close, and specifically this wick high, which is lining up with this low side structure at around 29,234, below there, it's likely to consolidate, and then we watch this downside area below 29K. If we do see price trading under there, then we pay attention to closures that occur below that 28,900. If they're higher volume and they get bought back up into this zone and close, then it's still not a breakdown. We can hit targets there over and over and over again, would not be considered a breakdown or continuation just yet. For those higher term timeframes at least, but we would be looking for continuation to further downside targets below that wick low based on that volume signature. So this is something that is a refinement to evaluating swing fail patterns, because swing fail patterns are going to occur around support and resistance areas. You can use them on a naked chart. You should be using horizontal support and resistances for this when you're evaluating swing fail patterns. Swing fail patterns on trend lines are not technically viable in my evaluation and back testing. I do know people that have tried to use them. I do not think that they are going to work for you because that's just not the way that order books work. Swing fail patterns are based on order book, order flow, and theory. That's also where swing fail patterns occur around order block zones, and then highs and lows. And that's typically where you're finding most of your order blocks anyway, on the highs and lows. And it's going to benefit you to be looking at that from the perspective of swing fail patterns on utilizing horizontal support and resistance. I had that question like, hey, I got my trend line that is this a swing fail pattern at my trend line? I said, yes, it might line up with your trend line for right now, but you should be using horizontal support and resistance. Create those zones. Now you add in the edge of understanding that this is one of the highest volume candles of this entire move down. So getting below it means that we're going to go retest these lows again. It also just so happens that that this is closed. We can use an actual horizontal here. We can use actual horizontals here in terms of the horizontal line, and we can see where the wick low is coming in. That is not what I wanted. Apologies. And we'll make that a 2 pixel, and you can see that it basically retested this breakout zone and got bought very aggressively. So if it does lose this breakout zone and consolidation, and this would be, considered the high side of this consolidation on a closing basis, then it would be right back to test the low side of the consolidation, even down to those wick lows. And then you look at the other side. Where are the highest volume candles in this range? In particular, you've got this guy here at that 28, 28,738. That is one of the key areas to the downside. So I would expect that area to get hit if we do see this wick low lost, this current wick low of this bounce. And then below there, we mark off these 2 wicks as being a bit of a zone of interest to the downside as well. So when you're working short-term time frames, this is the best way to evaluate that kind of stuff, in my opinion. I've been doing it for a very, very long time. And this is one of the reasons why I can tell you in a thread like that many, 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 many hours before a swing fail, or in this case, it was like 2 hours before a swing fail is confirmed, or a deviation of the 30K region, 28 or 29.8 to 30K. The reason why I'm able to call that out is because I'm looking at the volume signature, I'm looking at overhead support and resistance, and I'm evaluating kind of where that zone of interest is. So be aware of that area as a deviation, because if it does head back down and then of course lose that 29,160, which was this particular consolidation here, then we are going to go retest the lows. And that's exactly what we saw. It's not anything super complex. I'm not some kind of genius. I'm just reading the chart. And when you have the right view of the chart, you can do this too. And it's not anything that's super complex in terms of technical analysis. It's fairly simple and straightforward, and I know that each and every one of you guys can do it as well. So, and if you have questions about it, I want to see what you have to say if you are not experienced with swing fail patterns or volume analysis. Because before I move on to the next portion of this, I want to see if you have questions, because we are going to get into something that the gentleman who created the the levels, the landing band levels that will be integrated into the landing bands very soon. He's very, very big on this next piece, which is volume profile analysis, which is, then we're starting to get into the order book and an order flow or flows analysis at that point. So before I move on to that, let me know if you have any questions. I'm going to give you just a moment to catch up over there in in the chats for YouTube. I do see that you guys have some questions over here in Parsec. Give me just a moment, and I'm going to, some of those questions are going to be for just, we'll have to answer a different time. Yeah. Those are more specific to your guys' use case for this stuff. So not something that I really want to discuss in a public setting and a live stream. So if it's really specific, I'll just discuss it with you individually. You just take a drink while YouTube catches up. Don't seem to have a lot of questions. Got quite a few people here, but not a lot of questions. Oops. Let's see. Somebody just messaged me and said your stream is down. Can you guys over on YouTube let me know, is the stream up still? See if I can log in from my phone. So like my admin side is still up on the phone. Let me just type to you guys over there. Just to make sure. Okay. Okay, it's just you guys are like slipping further and further back, I think, by the time you're hearing me. So the delay, I think, has grown a little bit. All right, no questions about the swing fail stuff with the volume? I'll give you a moment. Thank you. So Baba says, good. Cheryl, fine. Roka says, all good. I see hearts and 100% going everywhere. And I'm assuming that is to answer my question there. Appreciate it, guys. All right, so the next thing that I'm going to do is actually a little bit if JRTA is in, he's a brilliant programmer and very good technical analyst as well. If he's in the chats, he will instantly recognize what I'm going to be doing with volume analysis here, but it's going to be a little bit different than what he might be used to. So for this particular volume analysis, I'm going to be using the fixed volume range utility, but I'm just going to be using this downtrend. And I'm not going to be using this range or any historical ranges of support here, just the downtrend from the wick high to the current area to get a zone of interest here for the volume profile. And you might be thinking, that's not the way to do that. Well, on the way down versus the way back up, when it comes to recent order book action and volume as it relates to that, it is one valid way. We can also use inside candles, so we can always pull the volume from inside the breakdown candle. We'll do that next and make a comparison. But right now, from the high to the current low side, and I do want to note that on the fixed range volume profile utility, I have extend right so that if you keep this on, next candle, it will update this volume profile. And the settings for this, I also have modified a little bit. I believe I've modified them a little bit. Yeah, I guess it's 124 is the normal row size. At least I thought it was. So maybe I didn't, or it didn't save it. But we'll just leave it there for now. After pulling that from the high to the current low to get volume, excuse me, Maybe I'll grow a little bit. For those of you that know me in real life, you know that I'm not the tallest person in the world, but if my voice keeps cracking like this, I still have hope that maybe someday I will become taller and maybe even a baller. All right, so we can see that the highest volume areas of this move down have come in on this low side structure. We are currently below the point of control, or the highest traded volume price, which is coming in at around 29,200 to 29,250 or so, which funny enough is right around this consolidation here, consolidation over here. You kind of see price oscillating in and around there. So the average area is going to be around that 29,200 to 29,250. If the POC is regained, you can see by the gap in volume here that the next big area would be around 29,300 to 29,350. That would be above this spike high again, this lower high from the way down as it relates to this high over here on the 15-minute chart. So on the way back up, roughly this last spike high at 29,350. So when looking at that spike high, that just so happens to be the highest volume candle of this move down so far. Now, when looking at the volume utility, you can see that there is a volume gap around 29,500. That's around the lows, 29,405. That also happens to be this last wick high, around 29,5 to 6 or so. And that was the kind of rejection that led to losing this 29,360 area, which is basically the area that was just retested in and around just slightly below on this more high volume dumpy candle. And above there, all this is doing is helping us define the criteria for the moves up that we were just looking at, utilizing a little bit of swing fail analysis. And the biggest high volume node here is going to be right around this high. And I do want to mark this so that you can see how it relates to current price action. And just kind of seeing what that traded price was. And we'll zoom in. We'll get rid of this. I can always grab that again. We'll zoom in here. And oh, hey, look, that's basically the deviation that we were talking about. Deviate above and then move right back down. And what you'll note is this was not necessarily the highest volume area on that move up. It was slightly above that highest volume candle of the move up off of these lows. But we have a big zone here. So you could take kind of the low side of the zone, 29.5 or so, or 29.7 in and around here. Or you can go right from the lowest traded or volume of this area. So you can go from, the start of it, and you can say, okay, well, that's coming in at 29,450, and this area to the top side is coming in around 29.7 to 8. So it's lining up with our support and resistance areas really well. That does mean that retests into this area of high volume at that 29.8 are, generally going to be looked at as an initial rejective area unless it can be regained and found as support. And that is not what we saw. We saw a deviation and then down. So this is just confirming that on the move down. We can then continue to add to this. So we can take and hide this real quick here. I'm going to take the fixed range utility, these past two. We'll hide those. And we can take the fib of the move down so far, and we can start looking at where the fib lines up with retracement areas. And oh, hey, we back tested around the 618 and slightly above. Nothing too crazy. And I don't want to alarm you or anything, but below the 28,500 area, we just happen to have confluence with our daily supports that I've called out on the other chart many times at 27.5, and then that's the 1272. If 28,477 gets closed below on the daily, from a fib structure standpoint, 27.5, 27.6 at the 1272, and then look at that at the 1414, we've got 27K or so. And when using extensions off of a regular fib like this, the 1272, 1414 are going to be the biggest areas of interest. And then, you know, especially when they fall on major areas of support, we see a lot of candles in here. But if they did fall apart, then we can start looking at that 1618, which is coming in around 26.4. And then we've got the 1786 coming in at 25.8. So when I talked about some of the deeper targets earlier, that's being derived from support and resistance, as well as you know, I've already pulled this fib, and I did want to zoom out. We'll get rid of volume, and I did want to show you that this guy down here, 200% is the closing lows, and that is at 25,091 on a close. And this perfectly encapsulates this entire range with this fib and this initial move down from wick high to wick low. Of course, it's not catching the wicks there. You can refine this and kind of take a look at that. So that would be the current move. How does that you know, line up with things? If we were to look at this as a retracement structure from the wick high to the low of the move, well, that 50% is still right there at that 28,300, and the 382 of this move up on a retracement is coming in at 27,466, and recall that is where the 1272 of this move down on an extension is coming in, right around that area at 27.5. So we have confluence. Now, to kind of get it back on track with swing fails, we can take a look at the daily volume chart as it relates to what is happening here. You know, this is the highest volume that we've seen on this particular move down from the high. But again, this is, what I will tell you is, wherever we see the highest volume candle come in on this move down, it's likely to reverse this downtrend. That's something to look for. And I'm saying likely, it's not a given, but wherever the highest volume candle comes in from this kind of compression on the way up, and we are very clearly seeing volume decline with the move down. Whenever we see another nice high volume candle, if it sets a low especially, it's likely going to reverse this. So keep that in mind. Just how far does it go down before we see something like that? And we'll go from there. At the moment, you know, the highest volume candle that we've seen in quite a while, well, at least the highest volume candle that we've seen from the move up, was actually put in right here at 30,800 or so. It's 30,007 something. And you know, as soon as that area gets reclaimed, that's kind of the big thing to watch for. When the bottom side of it gets taken out as well at 28,320, just happens to be the 50% of the move on that fib that we just looked at. You know, that's likely going to lead down to some of those deeper targets that we were talking about. So that is kind of how I'd evaluate this stuff for now. And of course, what you're going to see is a lot of people talking about, well, since the lows, it's been declining volatility. That's what you want to see. You want to see declining volatility, or declining volume rather. And I said volatility like 4 times, declining volume. And that's what we want to see as traders, is we want to see where does the next highest volume candle come in. Now, if this retraces further down and we get a giant bar, it's probably going to mark a low. Whereas if it was to head much further up and we get a giant bar volume, it's likely going to mark a high for quite a while. And that's what I'm looking for to the downside. We may not see it for a long time, even if things bounce and move up. But I'm really looking for maybe not that high of volume, but looking for an increase of volume that kind of breaks this pattern. You can throw a moving average on this as well. And then wherever that higher volume, if we are headed down, it's probably going to mark a major low again on the daily chart. And then we look for things to head up. And then on the other side of this, wherever we see a bar that kind of equals this volume bar on the other side, and I do like spot for this, by the way, then it's likely going to mark a high for quite a long time. Right now, this is not, none of this, I'm seeing a lot of like really scary downside targets, and none of it's there for me right now. I'm not seeing what I want to see for scary downside targets. So to be quite honest, it's not on my radar yet. I'm not see what I would want to see to fulfill any of what some of these doomers are saying about the really, really deep downside targets past this low, for instance. In fact, what I'm going to be looking for is something similar to what we saw back here, where we get the move off the lows. Let's get down here and really take a look. And we start marking the highs on the other side by getting that really big increase in volume. So we had the move down. We had the lower low spring. We had 2 big zones of interest here. And this was the initial rundown in May of 21 into the summer pump, and hit the spring and run over here. But realistically, what we were looking at was declining volatility. Well, we did see declining volatility in this range, declining volume even. I'm just going to say volatility all the time because I'm always talking about it. But what we're looking for is, this marked that area as a major low. And what we saw was on the other side of that, we did see a close below, but we saw the next biggest volume bar wicket, right? And now we got our downside range for swing fails. So this is the same process that I'd be using for basically the same process that I just showed you on that 15-minute chart when we discussed this. So we dipped into it and then boom, up. Now that we can search over here and we see that we start getting this move up, and it's coming on declining volatility, and then boom, we spike again. We put in a nice big high right here, move down. We see a move up. We see equal volume on that high area, and then coming into the low side. So now we've equaled this high right here on the low, and it never passed it. So then we're looking at this area over here. So we've got this high that was put in, and the next biggest bars were on this low side structure. And now we have that area of interest to the downside. If it breaks it, it's going to come back to somewhere around this guy here, which was prior to the actual break of the range at around 40K or whatever it was. So this little consolidation. I remember talking to guys in our chat about this while it was happening, and we were evaluating and looking at this as if it's going to maintain a Wyckoff structure, it cannot pass this spring. But when looking at the volume, held this area, came up, next big high volume area, go figure, was going to be right over here as it's pushing past that local high at 52.8 on this guy here, like just before it. Yep, no, that's the one that actually broke it. Nice high volume on a breakout, as long as we see continuation past its wick high, which it went sideways, and then we saw continuation past its wick high and to the actual highs. We see on the other side here, high volume bar. This high volume bar was the big dump off down to 43, 42, 43, and right into this consolidation zone. Anything that starts to close down below it is going to take a leg down to the next area, and that's what you saw over here. So that defined a range for quite a long time. Saw that area. Now we have this volume bar right here. We come down. This was the highest volume bar of this particular low side structure outside of this guy here. So between these two, you had the two wick lows. This guy here on the 7th of January 2022, and then the 10th. We see between those two bars, they defined this range, so close below them and that wick low, and you're going to see again high volume bar. We see that we did get closures below it. We got wicks back into it, and then wicks below it. It starts to define the range, though. If you look to the right, it held this area up after the recovery above it, so you've got a zone of interest between these two big areas and that wick low at 33, and then so on and so forth. So you just kind of move over one by one, and you can start predicting continuation and swings and swing fails. 27K seems to be the lowest price. I'm not in the business of making that particular evaluation, because I do think that it could be, but that there's no lowest price. There's no highest price. Just remember that. You might have zones of interest. I'm interested in 26.8 to 27K. If it were to get there, I'm interested in 28K and 27.5 or so. So you can just take it as wider areas, 26.8 to 27.5, 28 to 28.6. Those are my big areas of interest currently. And if it were to move past those areas, then, upper $25,000 area to 26K is the next big area for me. Just one level at a time. Don't ever get your mind set on a specific level. You have to evaluate it as you go and take your trades along with that thesis if you see what you want to see when price arrives at those levels. So basically, if it price spiked my area at the 28.4 to 6. I've been talking about this for ages. You guys know. For those of you that have been watching the Bitcoin in 60 seconds, you know that I've been talking about this for a very long time. 28K. I have plans to do things at these levels. Pick up spot or take trades off of these levels, trade it down, close my short at these levels, whatever it might be. That's what and I took a nice scalp trade to the upside. First long trade I've taken in a long time, and the reason why I was able to kind of give you guys a little bit of that edge is because I'm sitting right there trading with the 29.8 to 30K beware of a deviation, because I'm taking profit there as well. It's right up against the resistance area that we've talked about, to the upside. And let's flip this back to the daily. It's like, wait, those candles don't look right. It's right around, you know, the low side structure to the high side structure here around the upper first standard deviation. Logical place to take profit and look out for deviations. And when I saw the deviation, you know, I got a scalp short in. I mean, it's, you know, 3 candle structure right at the top, over top of the area that I called out. It was perfect. It was reclaimed and rejected as well. Filled a little bit more on the rejection area on some of the lower term timeframes, and then went from there. I mean, hourly and all the other timeframes started to turn against price as well, pretty heavily in that area. So hourly and under was saying, you know, if it breaks down from these specific zones and bearishly reclaims, it's going to go and test lower. And that's basically what I was talking about with the swing fail patterns. I don't know when some of you came into chat, so when you come back and scrub through the video, it should be I hope I made it clear, and I'll keep getting your feedback and refining my explanation of how to evaluate swing fails as we move forward as well. And then when it's integrated into some of the educational content that's going to be released soon, it'll be hopefully incorporating some of the education will hopefully be incorporating some of those things that you might have questions about right now. So, but yeah, I mean, level by level, we'll take it one bit at a time. I prefer the higher term time frame looks. If we saw 27.5 breakdown, I mean, 27 to 27.5 is, you know, extension area off that daily. It's a 382 of the move up, I believe. 50% is at 28.3, 382 is at 27.5, I believe. I don't know, I just said it, but either way. So move up would be boy, really? Let's try that again. Okay, so that would be 27.5, and that's the 1272 of the current move down on an extension. So, but I mean, if you're taking wicks, this was a nice bounce, but it didn't like set up a reversal. So if you're taking wicks like 27.5, 27K, yes, it's a big area of interest, but you know, make sure you just have plans for what you're going to do there, but I wouldn't say lowest price. But I know what you mean by that. Always be prepared for lower. Always be prepared for higher. But if you have confidence and interest in a certain level, you know, by all means, you should be taking action on it. So, all right. I'm going to open it up to questions and requests for a little bit here. While I let you guys catch up, I'm going to take a drink. I'm surprised my voice is holding up a little bit better today. So let me take a drink, and I'm going to go off mic for just a moment here and get your requests in for any altcoins specifically that you'd like me to look at. I already looked at ETH. I looked at USDT. So I haven't really looked at a bunch of other stuff. And to kind of recap for those of you that got here a little bit later, both for Parsec and for YouTube here, went over Bitcoin, took a look at ETH, took a look at USDT, took a look at traditional markets, Dixie, and then covered swing fail patterns with a little bit of added volume there for evaluating swing fail patterns, continuation, and reversal setups, or an actual swing fail pattern versus a deviation setup. Yeah. Jimmy says, if you release that content, how much is it going to cost? Free. It'll be free. Beginners stuff. That's all beginner stuff. The stuff, if I ever have content that's going to be paid content, it would be specific strategy stuff. But yeah, no, like general trading content is all going to be free. Discord. Oh, you guys want to join the Discord as well? You know what? Some of you guys over in YouTube land, these guys are professional traders, and they would love you guys would probably gain a lot of insight, but you guys can't talk. There's a lot of things you guys can't talk about, but you could talk about trading. I know that you're NDA'd on anything that you know about the industry outside of like technical analysis. But yeah, that would be awesome. I am working on the Discord thing. I appreciate it. Jimmy says I'll pay for it. I mean, it's not a money thing, dude. It's a time thing. I don't have anyone to moderate, and I'm already kind of at my limits. So for those of you that have been asking about Discord, it's not like I don't want to start a Discord or it's going to be paid or I'm trying to figure out any of that stuff. It's more about moderation. I just don't have the time to moderate a Discord, and many of my friends that are in just a private channel on Discord basically right now, just so we can BS, they also don't have time for moderation. So that's what I have to evaluate. That's one of the reasons why there is no Discord right now, but I will have a Discord and it will be free. Yeah, okay. So let's take a look. I didn't actually take a drink here. Soul, how do you break bad habits like turning up leverage? Turn it down. It's a button. Turn it down. You can keep coming here and I will yell at you about it. And maybe that'll help you break the habit. Look, turning leverage up too high is a very common thing. Also, I want to note that this wick zone that I drew out. Well, I mean, Cheryl, a lot of it is like auto mod stuff that I would probably have running. But if somebody needed specific help, it's just me at this point. There might be a few others that might be able to help here and there, but most of it would be auto mod, and I just haven't had the time to even set it up. So auto, authenticate you that you're a real person, not authenticate, anything other than that on Discord. But and then just some auto mod for, when it's an open public Discord that's free, inevitably bots are going to invade and raid and so on and so forth. So it can be difficult. And then scammers. Scammers are the big thing and usually have to be taken care of, manually. And it's I'm an educator and a trader. I mean, I trade as my day job. That's what I do. So that's how I make my money, is trading. And that's the majority of my day. And then that would take quite a lot of that, I would assume. But we'll get there. We'll find some solutions for it. But for right now, you just hang out here. You can DM me on Twitter/X or whatever you want to call it. For those of you that have not followed me on there, you do need to follow somebody to DM them now. So make sure that you are following me. It's just at CryptoLandy, I believe. Yeah. Yes, at CryptoLandy. And the link's in the description as well. So whenever you look at the description of any of the YouTube videos, the link should be there for you over to Twitter. And then I do threaded analysis there as well, as I've talked about quite a few times here. But if you're going to want to get in touch with me, DM me there after a follow, and all good. At least I think that's the way it works. Has anybody tried to DM me? I know some of you were asking last stream how you could get in touch with me over here on YouTube, and for you guys over there on Parsec. I mean, some of you can connect with me manually by calling me because you know me, but there are others of you that I don't know. And if you don't get my information or you don't have it already, you can also DM me and I'll try to get back to you. But I could take a look at Sol if you want to take a look at Sol. And just take a sip of this drink here. I've been using this mouse so long that this thing just creaks in the background, and I hear it on every recording and every stream, and it cuts through the microphone feed here. Why am I missing Sol? There it is. I found Sol. Sol in the daily spot price is definitely put in a high. And I had already marked off areas of interest to the downside for some reason. I don't remember why. I would say that highs in for a little bit. It's still a giant consolidation structure. As long as it's above, where it's trading, above this high, at around 22.33, it's fine. You can see the declining volume, same kind of stuff that we were just talking about. Now, declining volume, it is in an uptrend for now. I think it's probably found its low for quite a while, and it's just going to be playing in this range. Momentum on the dailies headed back down on any closes below 23.75. It's looking like it's going to close below there today. You do have a bit of a descending triangle structure going on, but it's not clear enough. This is more like, hey, if it loses 22, it's going to be back into this zone, probably around the $18 to $20 area first, after hitting some of the highs at 21.50. So I'd be looking at this structure over here. If it were to lose basically this last low here, that would be bad, and it's back to the lows for a while, and that's about 18.45. So I mean, that's my take on it. There's not too much else. If it can take out this local high at 25.60 to 25.61 or so, or 25.60 to 25.70, if it can take that area out, it'll be back to the highs. But until it breaks this high, you can see the volume on that high. That is that's a classic rejection and a high put in. So you just gotta wait, see how things play out. I would expect to see on any really aggressive downside moves, I would expect to see some nice volume as it relates to the current volume trend, and that's where you can put some MAs on volume if you want. But in terms of this volume trend, low is likely going to be set on wherever the highest volume candle comes in, around a support that puts in a three candle structure or more. If it's a consolidation, might even be seeing some of that now. I mean, it's just, it's sitting on support right now, but it's not looking great. 12 hours headed down, and any closes below 24.40. A little bit below that now. 4 hour is down below 23.50. Not too far away. I mean, the best hope for this current zone, after the high, yep. So it's just in a consolidation. I mean, the volume is telling you that as well, and it's got a very well-defined area of interest. So between 22.30 to about 25.70 rather. I'd be looking for this to put in some sort of a double bottom here, and then move on. Yeah, you want to see it reverse off this lower second standard deviation, regain those 200s and the basis at around 23.75 on the 4 hour, and then look to that wick high around the upper first standard deviation at 24.20 to 24.27. If it can beat that area out, then I'd be looking back into the strong half of $24 to the low $25 area. Below here, it's headed down to 22 bucks or so. Yeah, I mean, it's anemic volume across the board. This is a conversation that I was having with one Mr. Roca. Very, very, look, like some of the guys that, this is one of the reasons why I would want a public Discord, is because the guys that I have these discussions with are my friends, not the industry guys, but the guys that you see in the YouTube chat here. They know their stuff. And, one of the things that he was pointing out is the declining volatility across the board for, everything. You can see that in total market cap. So it's the volume has been, steadily decreasing since, we're talking May of 22. So, really everything that defined this as a, low side structure here, below that $1.28 trillion. And that is normal. What you're looking for is things to come back down, and you want to see spikes of volume up. And then what you want to see, for instance, like on total, you want to see this decline in volume. You want to see the little spikes back up every time this dips. And for this, I want to take off the bands because they just get messy here. Every time this dips down, you want to see the spikes in volume. So that does give you the indication that things are picked up. And then typically what you'll have is lower volume moves. You'll see higher volume breakouts, but then lower volume moves up. And then wherever you see the next really big spike in volume is likely where you're going to see a high put in. Not that it's going to be a bigger spike in volume than what we saw back here, but and this is defining the range, just like kind of Bitcoin, where Bitcoin's kind of stuck trading. We can see that about 1.75 trillion. Nope, it's a little bit higher than that. 1.082 trillion. So it's kind of defined the range that Bitcoin and some of the other areas have been trading in. You could even take this low side structure from the reaccumulation spring event. Why is this not snapping? Snap to it. But anyway, you can see that total is just barely holding on to it. Obviously, it's going to be very similar to the Bitcoin because it is heavily favoring Bitcoin there, but I suspect total 2 is doing much of the same. But it's declining volume across the board. Bear markets are boring. Just so you know, they're really boring. And we finally got a little bit of excitement in the markets, and there's a lot of news about what's going on. Total 3 has rejected off of this, so the shit coins are not actually doing as well as many are exclaiming it's Bitcoin and ETH that are driving everything. So there's been a few shit coins here and there that have been doing fairly well. Oh, we will come out of the chop zone. Look, everything it's going to take time. It's going to take time. And that the amount of time that it takes is going to seem like forever. And then when you look back on it, it's going to seem like it wasn't long enough. So just remember that it's all perspective, because, people get paid every 2 weeks. So if you're dumping money into markets every 2 weeks, like most in this market that are trying to accumulate or learning to trade in many cases, or just, passing interest in crypto and, investing every 2 weeks, it's the economy's tough right now. So less money going into this, less money in people's pockets to go into this stuff. So it is going to be, things will start kicking off when the big boys step in. And, we haven't seen that yet, which goes back to the conversation that I was just kind of talking about, that one Roca and myself were having, that, volume's kind of dying off. And when the big players enter the market. Now, one of the things that we actually discussed was, okay, well, if BlackRock does get an ETF through, what, don't they have to accumulate? And no, because of the structure of the ETF. They don't have to accumulate until they're ready to accumulate for the actual customers. So the liquidity is going to usually come from mutual funds, 401ks, IRAs, and that kind of stuff. That's what's going to be going into something like a Bitcoin ETF. And then, of course, there's news about, the SEC going after them for business dealings in China and stuff like that. So everybody's like all freaking out. News does not matter. Charts do. Charts told us that we were going to be moving down. Like, it's been pressure down for a while. So, hearing the news hit after we've already seen our wicks and things are dumping around and we get a move to the top side to trap some bulls, that's all. These things were already, I talked about the move to 30K like a couple hours before. It was like an hour or two before it moved up and deviated, right? Like, then news comes out about like, oh, this and this is happening at Binance and this, and it's like, oh, see the news, that's why everything went down. Like, no, I mean, the market is just humming along and the news comes after. You see the reasons why things happen on the charts early, and then the news tells you like, oh yeah, okay, that happened, interesting. But yes, patience. Oh, the patience stuff. Yes, you have to be patient. How long was I talking about this 28, 4 to 6 area down here? You guys will have to tell me. I must have been talking about it all along this entire consolidation, because I feel like I've said it a million times in the Bitcoin in 60 seconds videos. It's the 29, 4 to 5, and then the 28, 4 to 6 and 28K area. I've just been pointing out over and over again, like how many, when things do look like they're going to head back up, how many times have I told you about the weekly hit 30,300 kind of thing? Like, you might be looking for those targets, but it's going to take its good old time hitting them when you want them to get hit right away. And it's going to take absolutely no time at all when you're like, yeah, it's going to be probably a week or two, I'd expect. And then it hits it like, 5 seconds after you say it. That's just kind of how markets roll. But yeah, if nobody's got any requests for altcoins, then I'm probably going to call it a day today. I know for you guys over in the Parsec chat, a lot of it's super specific to you guys, so I will answer that for you individually. Yeah. You can either hang out on the Parsec, share or whatever they call it. Yeah, it's like for those that are in YouTube, it's like a remote sharing app. You're welcome, Spin. Patient stuff. Cheryl says it's been ingrained in my head for months. Yeah. Are you referring to my targets in the Bitcoin in 60 seconds? Yeah. You're welcome, Spin. I appreciate everybody hanging out. For those of you guys in Parsec, if you want to hang out there, you can. If not, just let me know and I'll address some of those questions individually, and I will have it because it will keep that chat for you guys. So I can just type it out. All right. Let me wrap this by saying Bitcoin below 28,850, lower second standard deviation. I'm going to say 29K because we're likely to see, if it closes above, we're likely to see it tick up to there as we do see bands quickly compressing for a much larger move. On Bitcoin below 29K, if we do see expansion, that's going to bring back into play our lows around that 28.4 to 6 and possibly lower down to that weekly. I don't know if I'd be looking for that lower third to get hit right away. Keep an eye on the 2-day chart coming into close, where the bands end up, that being the lower first and second closest to price action. We'll follow up on Friday, and keep an eye on momentum, and wherever that momentum pivot is. Of course, this is the KVDB advanced stoke. This is a paid stoke. If you have the funds, I suggest that you go pick it up from them and support Crown and his crew over there. They're awesome. I don't get paid to say that. If you want a free version that has pivots, it's not a free version of his. This is a completely independent project. But this is the BA reverse stoke panel. This is by Trader Haliala, whatever. Sorry, dude, I just butchered your name. But this has pivots, so just keep an eye on where that 2-day pivot updates to, versus the daily, and we go from there. I want to thank you all for hanging out. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, man, I've just been screwing the outros up. Hold on. That's going to do it for me today. I want to thank you all for joining me. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and as always, stay safe. And with all of that said, Landy out. I still butchered it.